All right, what's up, guys? It's 4 o'clock my time, 7 o'clock your time, if you're on Eastern time or New York trading time. So let's go ahead and get started. If you're new here, this is pregame with Rustik. I'm Rustik, one of your advanced traders here at Traders Helping Traders Discord. And what we do here on Sunday afternoons for me, evenings for some of you, is we look at how to set up your smart money concepts chart ahead of going into Monday's trading session. So I typically do Tesla. For those of you who aren't new here, we always do Tesla's chart. Tesla is what I primarily trade. And then after that, if there's more time, I'm open to looking at another chart or two. Most of you also know that SPY, QQQ, Tesla to some extent, and some of the high volume, heavy traded stocks, they respect the smart money concepts much better than low volume, low traded stocks. And so that's why I like to do these charts specifically with these high volume stocks. If you ever do look at I don't know an example specifically of a stock, but if you ever look at one that just maybe has like 500,000 shares traded daily average, it's not going to respect the smart money concepts quite the same. So just keep that in mind if any of you guys do trade options on low volume stocks or other assets, and you're wondering why it doesn't respect things like the fair value gap or order blocks or things like that. It's just because of the volume and how it's traded. So just double checking that you guys can all hear me good, and then we'll jump into the chart. All right, perfect. Also, just so you know, I am going to record this session today, and so it will be available on YouTube. But because you guys are premium members, you guys get it first. I'm not going to release it onto YouTube till tomorrow. So if you ever want to go back and look at it, it'll be there. But I want to make sure you guys are getting the value with being the premium members, that you guys get it first. All right, so let's pull up the chart. Also, if you don't have it, the link in the chat is where you can find the smart money concepts. Basically, it's like a cheat sheet, has all the acronyms, has the smart money concepts time frame analysis on there, some other really important smart money concepts information. So the links in the chat, as well as the smart money concepts time frame analysis screenshot, so you can put it on the chart just like I have. And so the first thing we look at when we're looking at smart money concepts time frame analysis is we look at the weekly chart. So when we're looking at the weekly chart, what we're looking for is we're looking to identify the next draw on liquidity. And a draw on liquidity is basically as it sounds, right? Liquidity rests in different spots. It can rest in wicks. It can rest in fair value gaps. It can rest in equal highs or equal lows. Liquidity is everywhere, but the important liquidity is going to be at very certain spots. Some may call it support and resistance as well. But we're looking at, on a weekly time frame, what is the next draw on liquidity. So we're going to label our buy side, BSL, buy side liquidity. That's going to be liquidity that rests in the upper wicks. Okay, and on the weekly chart, they're very clear. And so we're going to label off some of those buy side liquidity. So we're going to grab our tool over here. If you're using TradingView, it's easy to follow along with me. If you're using, any other charting, I'm sure you have the horizontal tool in there. So we're going to grab a horizontal ray. I like the horizontal rays because you can anchor them to specific candles versus like a horizontal line will just go infinite in both directions. I like to know where that price is coming from. So when we look at buy side liquidity, there's a couple different areas, but I'm going to really look at like the swing highs and swing lows. So I'm going to put this one here because as we drop into lower time frames, we'll probably identify some of these other spots. But I really want to look at like swing high and swing low for the next buy side liquidity. So I have this one here from the weekly candle back in July. Okay, that one's going to be buy side liquidity or BSL. Again, these acronyms are found on that website, the proptrader.co that I posted. And then next draw on liquidity to the downside on the weekly time frame is going to be all the way back here in April's candle. Okay, and that's going to be labeled SSL or sell side liquidity. you guys can label it however it makes sense to you, as so long as you know what that represents. So we got our buy side, we got our sell side. Okay, we're also looking for equal highs or equal lows. So EQH is equal highs, EQL is equal lows. Using smart money concepts, equal highs and equal lows get taken. Okay, and that's going to be, so it's different than a double top and a double bottom. I get asked this question a lot. Double tops and double bottoms are equal highs and equal lows, but using smart money concepts, equal lows can also come back historically. So right, like this isn't a great example, but right here you got a wick low and you got a wick low here. So that's not going to be a double bottom, right? This candle is not a bottom. This is just a candle. So if it makes an equal low, in this case, it's a relative, so it doesn't have to be perfect. But if you look at this right here, okay, we're going to call that relative equal lows. It's not exact, but it's close enough. And so anticipating that this low, these lows right here, are going to get taken, we're going to call that an equal low. Okay, and so you label that EQL or equal low. You could also write relative equal low if that helps you make sense of it. So we got our equal lows. I'm looking to see if there's any equal highs. I do not see the closest equal highs are way back here, which is above buy side liquidity. I am going to mark that off, but it's so far out that I'm not too worried about it right now. Okay, and again, every week we start, our charts are fresh, they're clean, there is no lines or anything on our chart every single week we do this. So you'll get that information as we again get closer to price driving back up. We'll address those equal highs there as well. So EQH or equal high. Okay, we're going to put that there. And then we want to see if there's any weekly fair value gaps that are of interest. Okay, and I can see too, I don't have my Smart Money Concepts indicator on. If you do, you're using the Lux Algo Smart Money Concepts indicator. It's the same one that Peter uses all the time as well. And so I see right here, and I'm gonna mark it red, just because that's gonna be my bearish indicators are gonna be red. Okay, so I see right here we have a weekly fair value gap that we're drawing into. We have not really pushed too far away from this. And what we know about fair value gaps is they are often have like a reverse pull, or they're like opposite of magnetic. They're going to drive price away from, and then oftentimes they pull price back into. Okay, so we're in the early stages of this fair value gap. Because it's a weekly, it acts a little bit different than like a 1 minute or a 5 minute or a 15 minute, where we might draw into this fair value gap first, then see price run away from it, and then see price return to it. So we'll have to see. I mean, we could draw all the way in and close it. There's nothing that says we can't. But we have not repelled away from that fair value gap yet. So that's something I am watching for to see if we get that reaction. But so anyways, we got a fair value gap. It's a bearish fair value gap on the weekly time frame. So between this candle wick low and this candle wick high, that's our fair value gap. Okay, and then another one I want to note, which is, so I'm going to take this equal low off right here because there's also a fair value gap there. And we have not really delivered back into it. I did mention it as we were coming down right here when we called the reversal kind of in live time. We came to that fair value gap. We saw a reaction. So I'm going to mark those as green. Those are going to be, that's going to be my monthly, or sorry, my weekly bullish fair value gap, right? And so you can see here, although it's acting a little bit different than this one, here price just repelled directly away from it and now has pulled back into it. So that's a perfect example of how that reverse pull works, where it drives price away and then back to. And we have not closed this out yet, so I do anticipate we are going to see that closed out before we see a rally back up into these buy side targets. So that's why I'm really interested in this inefficiency in price delivery, seeing us reprice into here and then deliver down here to see that fair value gap taken out. Because then if you look at price right here, there's really no fair value gaps in this area. So this is very effective price delivery. We had a fair value gap right here that's got taken out, had a fair value gap here that got taken out, right? These all no fair value gaps here. Then we have a large one down here, but I'm not going to mark it off right now. We'll see if we target that or not. But that's not of interest to me. I just want to know where the most recent two fair value gaps are objectively, bullish and bearish, right? Those are we don't want to create a bias within ourselves by only looking at one or the other. That's going to cloud our judgment when we are making trades, and so we want to remain as objective as possible. So we have our weekly time frame stuff, right? We know our next draws on liquidity, currently drawing or drawn into weekly fair value gap, and then we have our buy side and we have our sell side. We have an equal high up here, and then we have a relative equal low that sits inside this bullish fair value gap. Right, so now we're going to jump into the daily chart. I'm going to take a minute. Any questions on this before we move down to the next time frame? Pretty standard smart money concept stuff, but if there's people who aren't well versed in smart money concept or that are still learning it, there can be questions for sure. All right, I'll take the chat silence as moving on, and I see Boudica's typing, and we'll go back to her question if she asks one in the chat. So we're going to drop down to the 1 minute time frame. Again, I've mentioned this before. I haven't found a way to pin this screenshot into the chart. So you'll have to, if you're charting like directly with me, you'll have to just kind of drag it and adjust it as we move into the different time frames. All right, so the next thing we're looking at is we're looking at the daily chart, okay? And the daily chart, we're looking at key levels. So key levels can be anything. I mean, they're just, they're areas of interest. You might have heard them referenced as point of control or POI, point of interest. Point of control is often related to volume. Point of interest is just, maybe an area where we've consolidated before. Could be, could be a previous high, could be a previous low on a daily, weekly, or monthly time frame. So it can be there can be all kinds of different key levels. So some of the key levels that we look for are PD arrays. Okay, and PD is premium discount arrays. And how you know that they're premium or discount is, again, they're going to be on your buy side or your sell side. And then you're going to be looking at, on the daily chart, you're going to be looking at, are they below or are they above the 50 fib level? So what we want to look at is we want to look at this high here, because this is the most recent swing, right? Higher high. And then we're going to look at our most recent low. Okay, we're going to use our fib tool, and we're going to see our 50% levels right here. Okay, so when we're looking for premium or discount arrays, premium is going to be above the 50%. So anything that's not currently labeled that's above 50%, or anything that's currently below the 50% that we have not labeled off yet. Okay, so just so that I know where this is, because I don't want my fib tool up the whole time I'm doing this, I'm going to draw a horizontal level right here at the 50% fib level. Okay, now I have a cleaner chart. I got that fib off, and I'm going to look for any kind of horizontal levels that I have not measured off yet. Okay, so what I have and what I can see, although very close, is we have a low here. Okay, and we're going to have that go back to a black line. And that was in October, so we're going to call that our previous month low. Okay, if you have the Smart Money Concepts Lux Algo tool open, it should automatically have labeled the previous month's low for you if you have that selected inside the indicator. Okay, and then I also want to look at, although it's a discount array because it's below the 50%, I want to look at these equal highs right here. Okay, so that's not listed necessarily here in the daily key levels, but it is a, premium discount array. It's on the discount side because we're below the 50%. I'm not going to mark it as a discount array. I'm just going to say it's equal high, and it's also previous week high because that second top came on Monday. And again, this is a good look at what differentiates double tops from equal highs or equal lows. So this would be considered an equal high and a double top. Okay, we're at a top of a swing level. We have two equal wicks. It's an equal high, but it's also a double top. versus like what I showed you guys earlier, where you got, right here, wick in the middle of a run to a wick at a low. Equal lows, not a double bottom. Okay, so that's the main difference between equal highs and equal lows. Again, so key levels: premium discount arrays. Okay, I also want to mark off last week's low. So previous week low. Okay, so now we got a couple recent premium discount arrays. They're both on the discount side because they're both below the 50% fib level from swing high to swing low. Just important to jot down on a notepad that we're in discount for price. That's what matters. It's not that that your level is in premium or discount. It's that where we are in a cycle, that we are in discount. We're not in deep discount because we're not below the low of this low. Okay, so we've been on the climb back to equilibrium, which would be the 50% level there, but also we're still in the discount side, and so looking to see if that completes or not. We also want to look at the most recent optimal trade entry. Okay, and for those of you who don't know, optimal trade entry is a return from a high, from a swing high to an internal swing low, and then back to the 70.5% retracement level. So the most recent, well, first off, I want to look at this one. And if any of you guys don't have my fib levels, I share them with you. I'm happy to share them in DM. Also, if you don't want to message me or whatever, they're also on the link, theproptrader.co, that I have posted in the chat. Those fib levels are an ICT smart money concept. They're not unique to me. But what's nice about them is they have fib retracement levels and extension levels all built into one. So instead of having to use the fib retracement tool and then switch over to the fib extension tool, you have the retracement and extension levels all there in one shot. So it's very important that you also have those set up correctly, because it's a different setup than how most fibs look, where they have negative numbers in it. And so very important that you set it up. If you ever need any training or anything like that, I have a video on my YouTube that explains how to use the smart money fib tool, or I'm also happy to have a private conversation explaining that as well. So when we're looking on the daily chart and we're looking for optimal trade entry, okay, let's just check this. I believe it's not an optimal trade entry yet. But what I want to see is this fib level, okay? So from this low to this high, retracement was 61.8%. So that would tell you it was in the golden zone, right? And that's a retail concept, the golden zone. And I'm not surprised we caught a bounce there, because retail will look at that and say, oh, we retraced perfectly. I have not seen it come back to the 0.705 or 70.5% retracement. So I have not seen what I want to see in order to call this a reversal with further extension to the upside. I want to see it come back to the 70.5 level, see if that holds, rejects, and then we start to look for higher highs. That would tell me there's a smart money reversal on the table. Right now, the 61.8, not a smart money reversal. So I want to see, we're going to be watching to see what plays out next week. But the most recent optimal trade entry is back here. I want you guys to see how important this is and how much Tesla respects this. Look at this, swing high, swing low. Even though the wicks break through, look at where the candle bodies close, directly on the 70.5. Okay, and that holds up pretty good on the higher time frame charts. On the lower time frame charts, it doesn't always respect it quite as much. But on the higher time frame charts, it has respected it quite well, and it's been a great indicator of when to go short or when to go long. And so we're looking at the most recent optimal trade entry coming off of this move here. Okay, and then we got distribution, we bounced up, and we should see one more leg of distribution to take this low, but we'll see what happens. But that's the most recent one. And then I want to show you guys, I've shown some of you who've been on here in the past weeks, but this one as well. Okay, we respected it, we hit it perfectly, and then we notched over it. But anything over the 0.75 is still good optimal trade entry. Now, if you're trading a daily chart, you're not going to be trading just each one of these candles. You're going to be trading, entering on this perfect close right on the optimal trade entry, and then you're trading like 2-week, 3-week, 4-week, like monthly or even quarterly contracts, entering there, you're going to get that nice move. So again, on the higher time frame charts, looking at those optimal trade entries. But currently, as we said, we're not into a optimal trade entry on this move down. So the most recent one is back here. And that creates our bias because we have not seen a new smart money reversal on the daily chart. Our bias is still bearish. Okay, even though we got a run up and that was a hell of a squeeze, we've sold off a little bit, which was expected. Until we get that optimal trade entry and rejection, right now, daily bias is still bearish. So if you want to put it on your chart, great. If you don't want to put it on your chart, put it in your notebook. But we are daily bias bearish. And I get lots of questions like, Rustik, why are you so bearish? Well, there has not been anything to confirm that we're bullish. So every bounce is in a downtrend. So I expect it to get sold off. Sometimes it goes a little higher. Sometimes, time is against us. But that's why I've been playing puts for so much lately, because we had downtrend here. We got a bounce that sold off. Downtrend, right? Now we're in a bounce, downtrend. Nothing has shown us that anything is different than that, right? Price can still rally. It can keep going till it breaks this high here. There's no confirmation that we're in an uptrend at all. And so we'll be watching that closely. But daily bias, bearish, okay? And then also high time frame point of interest, anything that's not listed currently. So what I like to do for that one, although it's not a smart money concept, is I like to look at my volume profile for fixed range, and I'll show you where that is. That's right under the patterns chart, under the projections tab. Okay, and under projections, you go to fixed range volume profile. And with that, all you do is drag and drop. Okay, you find the candle you want to start with, and then you go to the close, the most recent closed candle. It's going to give you your fixed range volume profile. Okay, so for on that one, I'm going to put it right there. I'm going to close this volume profile so I can see it. And I'm going to say volume, node, point of control. Okay, so for that's for this entire downtrend right here. But I'm also going to go back and look at this entire move starting at the bottom and see if there's any confluence in that. Okay, we get a very similar, we'll call it a little range. And I'll anchor it back here. Okay, I'll close that one out. And I'll also call it the same thing, volume, node, point of control. So that gives us a nice range right here. Where'd that go? Oh, those are actually really close. I was thinking it was this level right here. So this is a very tight volume node point and control range, which tells you that this 250, this 253 area is going to be very important to watch because on this whole big move and this downtrend move, 253.34, 253.91 is our volume point of control for both of those. So nice confluence in that, where we know that once we do see our smart money reversal happen, whether it's a little bit lower low or we catch that optimal trade entry and start trading up, 253 is going to be our key target. So also, once you can identify that reversal happening, you can go long in some long dated contracts at like 250 or 255 strikes, and you should pay out nicely on those. All right, so we got our daily, we got our PD arrays, we got our most recent optimal trade entry, we developed our bias. It's daily bearish right now. Okay, and then we looked at our high time frame point of interest, which are our volume nodes here and here. Okay, so now we're going to drop down into the 4-hour chart. Also, I know some of you guys are charting along. I'd love to see your charts posted in the chats or whatever. Like, even if you don't think that they're great charts and you're just developing your smart money concepts, understandings, I like to see them. I'm happy to give feedback on them too. Or even if they're just straight up like just copied from what we're doing here, that's great. Like, I love to see people develop as traders and as charters. I feel like there's not enough charters here in the Discord. And so, if you got them, post them. If you feel hesitant to post them, send them to me in DM, just so I know that you guys are learning from some of this stuff. All right, so we're on our 4-hour time frame. We're looking at, again, premium discount arrays that are not already labeled. We're also looking to see if there's any, again, optimal trade entries that we missed, which we haven't. Again, most recent one was back here. We're also looking at market structure itself. Okay, so premium discount arrays that are not marked off, we can look at this one right here. And this is going to be a discount array, and it's going to be the previous day high. And I'm very neurotic about my charts, so I'll try to get it on the dot. There we go. All right. And then everything else looks good. 4-hour time frame, often not much different than the daily time frame. Just gives us a little bit better look. I do see a big fair value gap here, which we're drawing into, but we have it on a daily chart, so I'm not incredibly worried about that right now. But I do see that again that we're drawing into this fair value gap. That's a bearish fair value gap. So again, drawing on liquidity, testing this breakdown candle, right? We could run a test all the way to the very top of the open of that candle. Not likely to go into the wick too much, but very, very garden variety, common stuff to run a test on a breakdown candle and see what happens. And so running a test on that, and then see what we get on Monday, sell off, or maybe again break out above it. Let's see, market structure shift. So important that we notice that although there was a shift here where we gapped the breakdown candle, we took this high, so that is a shift in structure, and then we've traded back down to fill the gap. Maybe it missed it by a couple pennies, I'm not sure. But anyways, we came back to fill the gap. Okay, so we did have a bullish change of character as we went up here. But that can be a fake out because we really didn't get into this gap at all. But I do want to note that there was a market structure shift. Gapped this first one here. There would have been a shift in structure here on a lower time frame, probably even down here. But on the higher time frame, the shift came right here. So a bullish change of character. Okay, and then we have traded back down since. But we did not break into higher highs because this is all one move. So although there was a high here on an internal swing, we have not, again, taken the highs up here. So it's just an internal structure change. It is important to note that there is a difference between internal and external or swing structure changes. And so the internal ones are going to kind of be your early indicator that something might be changing. But for long-term moves, you want to see those swing or those external structure breaks as well. So again, we had the break here, but it wasn't by much, and then we sold down from there. So jumping into the 1-hour chart, drag this guy over, extend it up. All right, there we go. All right, so on the 1-hour time frame, we're looking for market maker buy model, market maker sell model. Any questions on can anybody identify or any questions on what market maker buy and sell model are? I did post it in the Tesla chat earlier. I was talking with AJ about it. I'm going to go grab the screenshot real fast so I can put it in our chat here. It's going to give you an example of what market maker buy and sell model looks like. Also in the Tesla Premium chat, I gave a live version of what market maker buy or sell model also looks like. So they're in the chat right now. Oh, let's see. Okay, yeah, perfect. So there in the chat is market maker buy or sell model and what it looks like. So basically it's, when you're coming from, we'll look at market maker buy model first, okay? So that's that top part of that chart if you can see it. It's when you're coming from a downtrend and then it consolidates at a bottom, eventually takes a little low, and then it starts to make a run to set a little bit of a higher high. Okay, and so what I want you guys to see, because it happened perfectly, and we called the bottom. I didn't identify it as a market maker buy model, but we called it perfectly. 2 weeks ago. And that's right here, right? Okay, so if you can see the chart, we come down, we consolidate. Okay, we come down, we consolidate, we come down, we consolidate. We have a low. We just take that low by a little bit. Okay, we run up, we consolidate, we run up, we consolidate, and then we run up to set the high there, or consolidate here, however you want to look at it. But right here was where that market maker buy model switched over. And the way you can identify that is with a intermediate term higher low. Okay, so ITL is the abbreviation. Oh, shoot. What did I do? There we go. All right. ITL is the abbreviation, intermediate term low. Okay, and then got a long-term low. And then another intermediate term low. Okay. And so what happens is that, oh, this is the long-term low. This one here is a short-term low. Okay, because that low didn't hold very well. We set a low. Okay, intermediate term, we came down. We set a low here, short-term low. That low was taken. That's going to be our long-term low. Okay, come up. We set another low, but it's a higher low. It's an intermediate term higher low. And then we ran up. So that's our market maker buy model. And that worked out perfectly. Now, what you also see is as we consolidated here, okay, we potentially on a lower time frame hit another optimal trade entry. And so what I do see as well, so the low doesn't have, or the higher low, excuse me, the higher low on a on a market maker buy or sell model does not have to fully take it like it did here. It can set an equal high. That would be fine. And so what I do see is a potential reversal here, where we're switching back to a market maker sell model. And so if you look at that again, how a market maker buy and sell model looks, we consolidated, we came up, we consolidated, we came up, we consolidated. Short-term high, long-term high is going to hold, right? Intermediate term high. Okay, came down, consolidated, came down, consolidated. We should see one more leg of distribution and then consolidation from there, to see if we do end up getting that smart money reversal, with this being the long-term low into a optimal trade entry fib level that should be down here around 200. That could be our holding point, and that could be a full smart money reversal, and then we'd see price go up to the upside. Or again, we could see further distribution to the downside if that doesn't hold. But we'll be watching that again from this low to this high for that optimal trade entry. But anyways, I just want to show you guys how to identify market maker buy and sell models. You're going to be looking at like 1 hour and like 15-minute charts for that kind of stuff. I'm going to just delete these. And again, the visual or the graphic is in the chat. I found that on Google. They used to have it on the website that I posted in the chat, but they don't have it on there anymore. So I posted it there for you guys. It's worth saving. I'd save it on your computer just so you can reference back, because it's easy to kind of forget about that. But that's probably one of the most important things of Smart Money Concepts, is knowing if we're in a market maker buy or sell model. Because also when you can identify the top or bottom consolidation and the run on liquidity to run the stops, and then you can identify that first leg of distribution, then what you can do is you can catch the second leg of distribution, which often ends up being the longest and strongest. And that's like what we had on Thursday here, where it just like boom, smashed down. And if you were able to catch just that leg, that was a nice payday, right? I know that those of you who follow me, we entered back here and rode through some pain. But you're really looking to catch that third, and that this theory is not new. It links up with Elliott wave theory as well, how you're looking for like a 1 2 3 4 5 wave pattern to play out, and often trying to catch that third leg of distribution. because that's where the big money, that's where the huge impulsive wave happens. Price usually comes rapidly declining. Then that fourth wave is usually, I think it's right here, right? 1, 2, 3, 4, and I think we're going to get that fifth wave. Fifth is sometimes only gets down to the bottom, sometimes truncates, sometimes just sets a barely lower low, and so it's not as reliable to try to only catch that fifth wave because you never know where it's going to end up. The most reliable thing to try to do is to catch that third wave of distribution, or second wave of distribution, but third wave in an Elliott. All right, so we got our 1 hour. We looked at market maker buy model. So right now it looks like we're in a market maker sell model. Market maker buy model is back here. It looks like we've had a reversal here. So it looks a lot like we're in a market maker sell model currently. But that is last week, so it is. It doesn't mean that that's going to hold up all week. Again, I gave you kind of a breakdown of what that would look like if we did not continue to be in market maker sell model. But right now we are in a market maker sell model, and so we are looking for any bounces up to get sold down on. So if we look again at the 15-minute time frame, on the 15-minute, we're looking for intraday structure. We don't care about London or New York kill zones in this point. If you are interested in kill zones, I'm happy to share some indicators that work really well for macro time frame analysis, but you have to do that in live. It doesn't really work that well, or it's just kind of irrelevant to look at it historically. The time macro analysis is good for in the moment live charting. I'm happy to share those indicators. One of them I have has the New York AM and PM sessions with the ICT silver bullet time macro in there. Another one I have that I use for futures but could also be used for Tesla or other assets is it breaks up the Asia, London, New York AM, New York PM sessions. So Tesla doesn't trade during Asia or London. Part of pre-market does, but it does identify the New York AM and PM sessions and color codes them. In case that's something you guys ever want, just reach out. I'll let you know what that is. So 15-minute intraday structure, and then price. So what we do want to identify is that on Friday, okay, we had a low. We came up, we ran the stops on that low, and we rallied up from there. So as far as intraday structure goes, we did see the stops get run. We started to push up, ran out of time. So again, going into a new week, it's going to reset. Friday is a reset day specifically, and so I do want to note something, and that is, let's see, where's Monday? I do want to note the fib levels here. Okay, we did not quite get to it, but something I did say on Friday, and this doesn't hold true every single Friday, but if price is going to reset, we have our weekly range here, Monday to Thursday, or Friday, I guess, Friday low, and then we returned nearly to equilibrium for the week. Okay, so that would be what I mean by reset, and that's a very good example of how Friday reset works. Again, not always true, but I use a lot of quarterly theory where, and most of you guys know this, Monday is consolidation, and that doesn't mean that we just trade sideways. We could dump down and then rally back up, but it's a consolidation or an accumulation day where smart money is ultimately looking to gather positions before Wednesday and Thursday distribution happens. Okay, and then we kind of just consolidated into the end of day. But again, we got pretty close to the weekly range equilibrium. So that reset us going into the next week. And then again, Monday we'll be looking for accumulation, Tuesday manipulation, Wednesday distribution, Thursday is distribution or a reversal, and then again Friday reset. So important to know quarterly theory if you are an ICT or a smart money trader. I also have lots of information and a graphic for If you check extended hours, I don't care about extended hours, Robert. Some people do. I don't track it at all. I don't even ever have it up on my chart. Once in a while, I'll go on like Robinhood and just see, what the after-hour traders are doing. But as far as technical analysis goes, anything in after hours doesn't mean much to me. Occasionally, you can see on like a pre-market data, you can see like a Judas swing. You saying the numbers work for what, like a Fibonacci retracement or something like that? Yeah, I'm not saying it doesn't. Oftentimes it does because there's still algorithms trading and the banks and the interbank price delivery algorithm, which is the market algorithm that books price. It's operating in after hours as well. And so that's how price gets booked. So I'm not surprised that it would still hold up to the smart money concepts, because the smart money concepts seem to be like ICT's reverse. I think he reverse engineered, basically how the market algorithm books price, and that's what I've gathered so far. So yeah, I'm not surprised that it works. And if it works for you to have extended hours up, then great. I just don't like it. It just creates extra noise on my chart, which I'm not interested in seeing. Okay, so again, Friday, interesting, point of interest on the market structure that we got back near equilibrium. And then if we again look into the 5-minute chart, um, and like I said, these lower time frame charts, it's good to have your ICT Smart Money Concepts time frame analysis pasted into your chart if you're just getting started or you're newer to this. It's entirely okay to trade with this screenshot on your chart, so that you can remember things that you're looking for day to day, because again, this 5-minute, this 15-minute are going to be good for your intraday trading, not just setting up your chart, because there's not a whole lot that the 5-minute tells us that we don't already know from the higher time frame charts by having our different levels out. Again, we see that kind of run on liquidity, right? But we did not see a smart money reversal here, even though this dumped on liquidity to run stops where they ran it back up. We did not see us trade back down to any fib levels. That just was a straight, just, kind of rally up. Friday squeeze back to a equilibrium for the week. Structurally, this does not tell me that this is going to hold. Nothing about it looks good. It just looks like price found a short-term low and then got bought up really quickly, probably to liquidate all the late puts and the shorts who were just piling in on some of Thursday's price action. But on the 5-minute chart, we look for execution, intraday liquidity grab, market structure breaks. So again, if we were trading on Friday, this move down here would have been identified as a liquidity grab, okay, because we ran the stops rapidly, okay, but you wouldn't have looked for, the market structure didn't shift until this high up here because we set such a good high on Friday morning. And so it wouldn't have been a good entry to trade this market structure shift. But when we're looking at, again, intraday liquidity, liquidity grab here. And if you were looking to trade that, you could have seen that this was a 5-minute massive rejection candle that had just stolen. Again, so if you're live charting, you're looking at these lows and you're seeing them get broken just barely, okay, from Thursday. Friday breaks the low, okay, rejection candle on the 5-minute chart. That would have been a great entry, a great way to identify an entry based on this, using the intraday liquidity grab and market structure break. Broke the structure to the downside, liquidity grab, enter, run it out through the rest of the day. Those would have been 0-day contracts, which would have been a pretty banger trade from the 205, 206 point if you wrote it out through the day. So that's all I got as far as the smart money concepts analysis, time frame analysis goes on Tesla. Is there anything that you guys want me to check out before we go, or any questions that anybody has? See multiple people typing. Yeah, so Boudica, I recorded today's session. I'm going to post it on my YouTube tomorrow, so you guys can rewatch them. I don't want to give the access. I want to respect that you guys are all premium members here in Traders Helping Traders, so you guys get access to this every single week that I'm available to do it. I know once in a while I have things going on, so I'm not able to do these. Free members get this once a week live on Sunday, where everybody has access to it. I'm trying to do that like first Sunday of every month will be for free members. And then premium will get it all the other Sundays. And then I'm going to start recording them and posting them on like Monday or Tuesday, again, so you guys get the pre-game, the early access before the start of the trading week, and then also availability to go back and watch it, while anybody who's not a premium member or anybody who's not even on this Discord will have access to it after the trading week. I probably will wait till after Monday's trading session to post it. Mohammed, you're asking what the price. So daily bias bearish. What's the price action to look for? Okay, so a couple things that we're going to be watching for, Mohammed. I did go over this. I don't know if you caught it. I'm going to delete this just so that we can have a clearer look. Take some of the noise off the chart. But two things I'm going to be watching for, all right? I'm going to be watching for this swing low to the equal highs up here. Okay, and I'm going to be looking for a perfect candle close on the daily chart at the 70.5 level. Okay, if we get a perfect, I want it to be like as perfect as possible. Okay, daily candle close at the 0.705 or 70.5 retracement. Okay, and that holds for that day. Okay, I want to see that to be fairly certain that we're going to start to see it rally higher. Okay, that is one thing I'm watching for. But that's going to give us an indicator that we are in a smart money reversal, because the most recent one that we saw was all the way back here from this swing high to this swing low. Okay, so we'll look at that high to low. Okay, and on a daily time frame, this is not a daily, but on a daily, that was near perfect where price closed right here at the 70.5 level, right? And then we sold down. We also did not get symmetrical swing on that, which is partly why I'm looking for price to come back down to 190 at least. Okay, because what we want to see is we want to see that return to fib. We want to see it back to the zero. But then we want to see it extend at least all the way down to the -1. Beyond that is fine, but at least back to the -1, that's called symmetrical swing. Okay, and the algorithm wants to symmetrically swing and balance price down to at least that -1 level. If it doesn't hit it, then we got to figure out what else is going on, or anticipate that it's going to come back around to hit it. Okay, so what I'm looking for next week is I'm looking for price on a daily time frame to close nearly at the 70.5 level, and then I would expect at that point, then we potentially rally higher. Now, I don't think that that's actually going to happen, but that's one thing I'm watching for. Okay, the next thing I'm watching for is the fact that we had equal highs here, came back down. We set another optimal trade entry in here, and I believe also in here. Both of these were optimal trade entries, so this is like a wave 1, wave 2, and then this is an optimal trade entry in a wave 1, 2, 3, 4, 5, potentially of a Elliott wave, where this is a wave 1, this is a wave 3 that hasn't quite completed yet, or potentially completed here, and then we're going to see one more push down to take this lower low. Okay, that would support a potential market reversal right down here at that fib level, rally up. Or what I actually think is going to happen is I think we're going to come down and take this low, but it could take this week. It could even be into the following week. Just depends on how price gets moving. We do have a data-heavy week, and so we really could get cooking, take this low. And then once we take this low and we get that symmetrical swing I was talking about that was down here in the 190, at that point, we'll reassess and we'll see if we do get a bounce up and then a smart money reversal, and we'll go over that in future weeks. So those are the two main things I'm looking for, Mohammed. And again, I'm looking for distribution to occur on Wednesday, and then potentially continuation into Thursday. I do think it's going to happen faster this week than it did last week. Last week was a no data. I think it was a no data or low data week, and so that's sometimes why the quarterly theory doesn't play out exactly on the time frames that I'm expecting, and I forget to pay attention to that once in a while, and that's my bad. But on the data weeks, it operates usually or behaves more well than on the low data weeks. Let's see, Robo Batman. Yeah, you're welcome for the market maker buy model, sell model explanation. There's lots of good videos out there on YouTube as well that explain it in depth. If you're interested, I think it's something that's worth spending some time getting educated on. And then also you want to see it in SPY. Okay, let's pull up SPY and see what SPY's chart looks like. Let's go like a 1 hour chart. Let me clear my drawings. Let's see. So actually, let's go to daily. Okay, so we got, it's not perfect, but we got our optimal trade entry right here. Okay, on that move. I also see potentially another smaller optimal trade entry, and that one was perfect on the money. Okay, so but on that, I also see a market structure shift here on a daily time frame. Which things look different for SPY than they do for Tesla. And so what I want to see on Tesla, or I mean on SPY, is I actually want to see price come down from where it currently is after this market structure just shifted. And I want to see price come down and trade on a daily time frame down to 418.39. And I want that to hold, and I want that to be a smart money reversal. It's also going to look like a inverted head and shoulders. I want price to close here and then head up. So technically, I mean, we are technically still in a market maker sell model on a higher time frame chart. Let's drop down into the low time frame chart though, like the 15 minute, and see if there was any indication. I don't think there was. No, you got it. It's a little sloppy. I think because SPY was really squeezing, but basically, you got this range right here. Okay, and if you're looking at market maker, this is going to be a market maker buy model shift from a market maker sell model, and you're saying highs are here, and we want to take those highs. So market maker buy model just means that we're going to be seeing a reversal off a bottom, and we're going to take a high. And that can be a shorter time frame high, like on the 15-minute chart. That's fine if that's the chart you're looking at. But what I want to show here is that we have consolidation. Okay, then we see, I'm trying to make it very clear for you guys. See our distribution. Okay, then we see another round of consolidation. Then we see another distribution. Okay, and then we see our final consolidation. And I'm going to make this a different color so that it's very clear. Okay, and then something I want to note here, just so you guys can see how it all unfolds, is that then we have a intermediate term low, okay, that gets taken. Okay, we come down, we consolidate. Okay, we set a long-term low that's going to hold. We come back up, we break structure. Okay, we don't get our fib retracement that we want, but that's fine. We hold above. Oops, hold on. There we go. We hold above that level, which is what we want to see. Okay, so we did come up, we broke it, we held above it. And all these concepts work together. So you just got to, I mean, there's different things going on. There's also a fair value gap right here. Right here. Okay, so we had that, consolidation, distribution, final leg of distribution, consolidated, swipe the low, changed character into fair value gap. Okay, we get our first leg of distribution to the upside, right? We get our consolidation. Okay, we get our next leg of distribution. We get more consolidation. This time a little bit bigger. And then we see our final leg of distribution, right? Ultimately, we ended up taking the high. Does that make sense to you? Does that look very similar to the chart that I just shared with you guys as far as like what the market maker buy or sell model looks like? I mean, it doesn't look perfect, right? Like somebody charted that graphic so it looks perfect. No price action is going to look exactly like that graphic that I showed you for the market maker buy or sell model. But that's, that's ultimately right here on the chart what exactly just happened. Yeah, so Robo Batman, yeah. Spy and Tesla do not always agree, and that makes it very difficult. And to be honest, Spy and QQQ or Tesla and QQQ don't always agree. Which QQQ is the index for or the index for technology stocks. And Tesla is its own thing. It's so heavily retail traded that you often see a lot of discrepancy between what Tesla's doing and what the rest of the market's doing. So I don't think that it's just so easy as comparing those two and expecting, now when the whole market is in a face rip and rally, like it's no surprise that Tesla also kind of followed, even though it was lagging. But you can't just put those two up next to each other and say when one does this, the other one's going to do this as well. And if you can live chart what price structure or structure and market price is doing, you don't need to be comparing it to anything really. You're just watching price and watching for these different smart money concepts that you know and understand. Spy. Oh, also Robo Batman. So Spy is in buy, Tesla's in sell. Yeah, I mean nothing has been confirmed that Spy is not or is in a sell mode. It's in a buy mode. But also there's other highs that can be taken right here that are local to Spy. So it could keep going. I mean, it definitely could keep going to take these highs where Tesla just has a giant gap to fill, and that's the most immediate thing on Tesla is just that there's a big gap. I can go back to it real fast, but let's look on like a daily chart. I mean, Tesla's already made a run here to test this breakdown candle and failed. And then the only immediate things that are anywhere close to Tesla is running on these equal highs, filling this gap, wick to wick. You have a volume imbalance or a price imbalance, and then open or close here to open here. You have that full day gap. I mean, that's the only thing to the upside besides this this equal high and previous week high for Tesla, where SPY has a lot of upside targets because it's rallied so much. It's got wick here, it's got gap here, it's got high here, it's got high here. So there's a lot of like more local targets for SPY. But again, if you look at RSI, I mean, I guess on the daily chart, like SPY could still keep running. we'll just have to see. I don't know with SPY. It's like off the rails right now, to be quite honest. Mohammed says indexes are down. Yeah, just a little bit. Well, $13. Actually, that's pretty far down. I hadn't seen it. Let me pull up. Let me pull up something. Oh, look at that. This is just a paper trade on a futures contract, but I was down like 11,000 on Friday, and now it's up 53,000. That's interesting. Yeah, so we should, if it continues to hold, we should see a nice gap down on SPY to start the trading day tomorrow. And again, I anticipate that this distribution happened. I mean, also looking at this RSI, even though we're pointing up, like we're pretty blown out, like off this control line. So would not be surprised to see, something like this come back and test the control line and then rally up, which would give us a look like, price coming back down. I mean, maybe down here, somewhere in here, and then seeing a rally, right? I think I said I wanted to see price come down to like 418, to be honest. I don't know if we get down that far and whether that would support this move with the RSI, but I'd like to see price come back down. And there was a lower. Let me log out of this real fast. It makes a bunch of noise on my account. All right. So when we drop down like into that lower time frame, I wanted to see us come back and test like this area of consolidation right here, because there's a gap there. Then there's not much like structure in here. So I'd like to see us come back down and test this structure right here. Maybe even test this fair value gap right here. On the 15-minute chart, I think it was. Yeah. And where would that put us? Down to like 414. I don't know if we're going to get that low, but at least down into this consolidation range in that like 418, 420 area. And then see what happens there. At that point, I do think we could see it continue to rally to the upside. It's on a much different wave count, SPY is, than Tesla, which is very interesting to me. That if you look at SPY, it caught a 1, 2, 3, 4, 5. So it's already caught, what appears to be a 5 wave. And the distribution leg was a 5 wave in itself. So all impulsive waves in the direction of the trend. So if it's a 5 wave move, your wave 1, wave 3, wave 5 are also going to be constructed of 5 waves in themselves. And so we got like a 1, 2, 3, 4, 5. So that's our distribution leg, wave 3. And then I see like what appears to be another 5 wave move. And I think this was a much bigger, 1, 2, 3, 4, 5. So that looks a lot like this is done. All of this should be done. And then at that point, we typically see an ABC move, which is a corrective pattern, and that's going to be something like what we're seeing here, right? So A, B, C, and then that will determine if we don't get to a higher high and start trading up, then what we're going to see is another 5 wave move to the downside, and that's going to be something like that. I mean, no promises on where it gets to, but anyways, it's going to be another 5 wave move to the downside, because we already got 5. We'll get a corrective 3, and then we'll get another 5 wave move, most likely. I don't trade Elliott wave. It's just a gauge of where we are at in wave counts. And again, it's helpful to know how Elliott wave works, because you can try to catch those third wave distributions. Any other questions? We're at about an hour, but I'm happy to field some more if there are any other questions. Hope this has been super informative for you guys. I like doing these things for you. I wish I was around more during market hours to be able to do like live streams and stuff. Mohammed, last question. Can we see 219 this week? Let me pull Tesla back up. I mean, the way futures is opening, I highly doubt it. But, it's not off the table. I mean, with the way the market's been behaving. But again, I think we're gonna. I'm not anticipating it. Let's just say that. But if we get a low range, let me go to like a 1 hour chart and show you what I mean. if we get a low range Monday where we stay within the low of last week of 205. Actually, I don't even want to see that. I want to see. Oh, that was Friday's low. Yeah. So if Monday ranges, I'm just gonna say this: if Monday ranges between Friday's high and Friday's low, if we stay inside that range, then I think we could see. And I'm not extremely confident in this, but it's not going to take it off the table. Okay, if we range in here on Monday and the real move is going to distribute to the downside Wednesday, Thursday, what we could see is a run on stops, which would take us over 215. Okay, I don't know that we get to 219. That's pretty far up there, but we could see a run on stops into Tuesday, or even a further, manipulation into Tuesday. Maybe it does go back up towards 220, makes it look like we're going to fill this volume imbalance. It could be possible. Okay, but we're going to see that manipulation move on Tuesday. So again, consolidation on Monday, and this is only one scenario. Okay, if we get a range inside here Monday, manipulation to the upside for the move to be to the downside, that would be your only hope, Mohammed, in my opinion, if we caught it early in the week. Now, the opposite scenario in this case would be a consolidation on Monday, okay, a manipulation to the downside to steal the stops in Friday's low, and then you could see price distribute all the way to 226 into the week if the move's gonna be to the upside. Okay, those are two scenarios, and those are based on small range Monday. If we were to get a big range Monday where we, traded either up or outside of one of these, then those two scenarios are off the table. We got to reassess and see where that's going. Because if we were to say Monday closed below this low, right, then our Tuesday manipulation is not going to be all the way back up here. It would potentially be here for distribution to come back down into the 190s. Okay, and then oppositely, if we were to take that high early into the week, our manipulation is not going to be all the way back down here. It's going to look more like that, and it could distribute higher to the upside. So a lot's going to hinge on Monday's range. So be watching for where we open and close. I'll try to update that on my Monday video. Any last questions? Anything else, guys? I see some new faces. Well, not new faces to THT, but I see some new faces in the weekend session. I see W4X in here. Appreciate that, dude. He's solid on the Theta gang over in Theta chat. If you guys are interested in selling for premium, he'd be your guy. Also see some other names I haven't seen in here recently or not at all. So appreciate all the support. See somebody else is typing out. See if there's one last question before I go. All right, they stopped typing. All right, well, if you guys got any more questions, happy to answer them in DMs. Happy to answer them in any of the chat channels or whatever. Just tag me. Again, appreciate all the support. Hope you guys found value in this. We'll be back next week again for premium members. Take care. You guys see you in the trading rooms.